Hi, this is Paul from globaltradingsoftware.com, and this is a futures trading strategy, but also if you're trading CFDs with gold. Gold is one of the biggest reactors to the US dollar when we get big data. And the way we use the range breakout is very, very crucial to catch these really, really big moves. So today is the 13th of July 2022. We've just had inflation data, and this is what happened to gold. Okay, so how can we trade this on those big data points? NFP, inflation, CPI, some really big data points. Now, they don't always react, but when they do, we need to be ready for them to go and break those ranges, if you like. So the xBrat range breakout indicator defines ranges. So we've got the gold European Open at 2 a.m. EST, 8 a.m. European time. Then we've got the New York Gold Pit Open 10 minutes before the major data point. This is crucial. So we have two ranges here: the opening range for New York Gold and the opening range for Gold European. Okay. So what we're looking for really, we'd never be able to trade this. You've got to be really, really quick. So you could, in theory, once we've got this opening range defined, just below this pivot here, put an entry at this point for a short, and for a long, we want to be above this pivot for the long, okay? But one of the biggest things is having this European Gold Pit Open, this range defined, because this is the trade. You've got the Gold Pit Open. If you're going to go short, be best going short below this opening range. The range is defined. You see how it turns red and just absolutely tanks down through there. So once we've got that Gold Pit Open complete and we're at 8:25, we've got 5 minutes before that big data point. We're going to be a little bit more liberal with there. At this moment in time, we know the US dollar gets strong on this type of data, so the gold goes the opposite way. So we're really looking for the short there. Understanding behavior is very, very crucial. Aggressive entry 17.25.80, but reality, this is where I traded 17.22.8. Okay, so below this gold European Pit Open, there's the range. Boom, straight down. We've got confirmation from our bias depth heat map. All the links to these indicators are in the description of this video, and it's a big move. We're using the manager to manage this trade. He's on aggressive, and we're still, this ribbon is very red and very wide right now. So this initial move down to those lows was 182 ticks. That's $1,820 per one contract on gold futures. So massive move. These may only happen once or twice a month, but they're $1,800, $2,000 moves. If you get those twice a month, that's $4,000 a month. It's not a small amount of change, and that's actually more than these indicators cost to buy for life. So there's some very, very crucial points in time. Now, we can trade oil on those datas as well. But one of the biggest reactors for me, because we've got that Gold Pit Open 10 minutes before, we've had the Gold Pit Open in Europe. We've got two defined ranges that we can use to trade through, but also the range for those openings is actually coloured in the bias. So this one's coloured in green, so we're only looking for longs. This is coloured in red, we're only looking for shorts. We've got the bias depth heat map giving us that confirmation for that short. Prior to that data coming out, put the order on to go short. Set your profit target for 150, 200 ticks, whatever you're comfortable with, and just let it trade. You will get some slippage because it's a massive move really quickly, but you've got to have that take profit in mind. Or if you want to let it run, use the manager. And what we're looking for on the manager is for this red ribbon to remain red. If it turns to green, we take it out. At this moment in time, we've had higher than average volume down candles. Now we're having a bit of a move back up. You see here it's bouncing back up here with higher than average volume on this particular 5-minute candle. So we just got to be a little bit sensible on where we put these entries. These are explosive moves when they happen. Using the range breakout indicator, having the bias for that range red in this case is the perfect opportunity to get into those trades. Hopefully that helps. Speak to you all really soon.